So we wrap up the final market week in the month of June. Welcome to Capital Market. I am boosting them up. Let's get the show started. The big story as we wrap up on Friday trading, Airtel Africa floating $750 million IPO on the London Stock Exchange, 80 pence a share and market value of nearly $4 billion US dollars. But the price of the stock falls some 16% on the first day of trading. The telco also concludes during the week the pricing of its local IPO on the Nigerian Stock Exchange, 363 naira per unit, allocated to strategic investors and high net worth individuals. A formal listing for Airtel Nigeria will be due July the 5th. According to the CEO, quote, "We are now the first telecom company to simultaneously list on the premium segment of the London Stock Exchange and the Nigerian Stock Exchange through an initial public offering." He went on to say that we welcome our new investors and look forward to continuing to execute our strategy and deliver the growth opportunities across our markets in voice, data, and mobile money. Meantime, mortgage-backed securities, according to the central bank chief, Godwin Emefiele, on Monday, says the regulator will work to develop framework to enable banks securitize mortgage loans tradable in the capital markets. According to the central bank governor, safeguards will, however, be put in place to reduce the risk of delinquency in mortgage-backed assets to be sold to reduce credit and reduce liquidity to banks holding the assets on their balance sheet. The new program will also improve the amount of funds available to support mortgage loans and reduce the high cost of obtaining mortgages for banking customers. That's part of what the central bank chief described in his new 5-year agenda. And the Nigerian Stock Exchange spent some part of last week holding a 3-day campaign in the week to increase the exchange-traded funds investment as a transparent and low-cost option of entry into securities market. This week, a total of 505,460 exchange-traded fund units were sold, valued at 39.278 million naira in 27 transactions. And of course, we're entering the new month in the next 48 hours. So this is what we have on our calendar. Some of this you'll find very interesting in the new month. Airtel Nigeria shares will be listed on the Nigerian Stock Exchange July the 5th, kicking off the second half of the year with this big listing. Meantime, the legal tussle between Wando Nigeria PLC and the SEC continues at the Lagos Federal High Court on July 4th and the 22nd. But on the 22nd, Lafarge Africa's shareholders will be meeting with the directors to ratify plans by Lafarge to sell its South Africa unit for $312 million US dollars, looking to deleverage its balance sheet. And later in the new month, First Bank says it's going to call and prepay holders of its 8% subordinated note of $450 million US dollars ahead of the maturity date in July 2021. That payment is expected to come through on the 23rd of the new month. And GT Bank Board of Directors are meeting to discuss the bank's first half of 2019 financials and a likely half-year dividend. That's according to a statement issued to the stock exchange during the week. And NESE over-the-counter market, the NESE OTC PLC says it's closing its register as a company July 8th through to 12th, while its annual shareholders meeting will be on the 17th. No dividend for shareholders was expected, according to a notice posted on its official website. So how did we finish off the marketplace in the week? The stock market tried to claw back to 30,000, but failed to do that despite Friday's 0.39%, which we saw, and the market equity cap 13.29 trillion naira. Look at in terms of volume, we did a little above 1 billion shares in the week, 28.03 billion naira, again, because of those huge volumes we saw in the trading week, more than 18,600 transactions. And of course, the banking sector added about 0.2% to the gain. Consumer goods brought in 3.22%. Industrial goods were off track about 0.04%. Insurance lost 1.15%. And oil and gas 0.68% in the green territory. Look at the NESE over-the-counter market, a very impressive 3.01% on the unlisted securities index, 746.34 print on Friday, And in terms of volume, that's at the doorstep of 1 million unlisted securities for 91.44 million naira in 75 transactions. Friday was still an impressive day at the FMDQ Securities Exchange PLC, where investors traded a total of 62.9 billion in naira paper. Those are the four most actively traded papers. Then on the treasuries market, 197.35, nearly a trillion naira in naira worth of treasury transactions in the week, one of the most active in the month. That's bringing the month to a close, 197.35 treasuries. Okay, so let's talk about how to deepen the capital markets. And this time we talk about stocks, bonds, unlisted securities. This is adding commodities trading into the mix. For those of you who may be unaware, we have a trading platform which is called the Agro-Commodities Exchange, and these folks are ready to take the market to the next level. Now, Adeyinka is here with us, who is a member of the team. He's the business development manager at Agro-Commodities Exchange, and he's taking us through what to expect and how to understand the new commodities trading, which of course will be on agro products, maize, soybean, and a few other things that we consume. And how do you make money? Adeyinka has an idea. Good evening. It's good to have you.
Good evening, Bob.
Thank you for coming. This sounds like music to my ears. When we talk about agriculture at the government level, we want to revamp agriculture, where the central bank is doing Anchor Borrowers program for rice. Now we're talking about cotton and what have you. Putting a market behind initiatives in agriculture looks like the way to go.
It is the way to go. And the market is highly informal, and you can't expect to deepen the market when it's highly informal. So you need to put a level of visibility and traceability in the sector, which is what we are positioning ourselves to be able to do across board. Now, the key drivers of commodities being included in the capital markets will be: do you have access to producers of these commodities? Do you have access to buyers of these commodities? Can you create an asset class wherein investors in the capital market could seamlessly play? And those are the structures we are putting in place to ensure that, as part of the global government's agenda to promote agriculture in the country, we can create an asset class that capital market players as well as retail investors could easily invest in.
This will be good for, we'll talk about how this creates wealth for everyone within the value chain, because I'm sure from farmers to those who are holding the financial papers, warehousing guys, everyone will make money as we move along. But let's try to understand what Agro-Commodities Exchange is bringing to the table. What's your platform all about? How will it work?
The platform is basically creating an avenue where there's transparency in terms of pricing of these commodities. I always ask people that if you had to say what's the price of maize in Nigeria today, they're likely going to give you 3 or 4 different prices based on the location and who you're asking. But should you have different prices for a particular commodity? And this happens because there's no transparency and there's no clear methodology for arriving at the final price of commodities that will be traded. Now, if you compare the commodities market to the fixed income market or the equities market, the dynamics are totally different, right? On the stock, everything is traded without reference to a particular location, and same as fixed income as well. But when you look at commodities, you need to take into consideration the location of production. You need to take into consideration where the consumers' markets are. Now, all these dynamics have an effect on how the final produce will be priced at the end of the day. Now, do all players in the markets have access to all these producing communities and consumers' markets? Maybe no, maybe yes. You need to put a structure in place that ensures that wherever an investor is, whoever you are, you can easily get access to what the prices are, irrespective of whether you're looking at producers, communities, or the offtake communities. All these have an interplay, they play together hand in hand, and it helps create transparency in the market. Now, when you have transparency in the market, that's the first step towards price discovery, meaning there will be a fair balance between demand and supply. When you have that, then you're now beaming more light into an informal sector to create an avenue wherein sound investment decisions could be made by all stakeholders.
A very quick one. So let's start with the crops. This is the map of Nigeria. What products are we looking at?
So we're looking at basically dry grains and oilseeds, and we mean by maize, soybean, paddy rice, sesame, sorghum. Those are the ones that are hugely consumed in the country.
Yes, by looking at our population.
Yes.
Very huge population. We grow very fast. We have youth population.
Exactly.
And all that. So these are very nutritional items. Soybeans, maize, cocoa, sorghum. This goes across south, west, east, north, every part of the country.
Across the country. I mean, you see cocoa production cutting from southwest to the south part of the country.
A bit of southeast.
Yes, a bit of southeast. You see maize production, even though it's predominantly in the northern part of the country, but a huge production also goes on in the southwest and the middle belt region of the country as well.
The ginger is becoming also a product of the day with health matters and all that.
Yes,
not talk of soya bean,
exactly.
Which is very rich, nutritional for children and even for adults.
Exactly, and because our soybean, the soybean still farmed in the country is very much organic, so the demand for it is huge, which gives room to so much potential for the industry to grow. I mean, we have a lot of foreign players coming in this market to play, whereas local players still don't have direct visibility on activities going on here. Cocoa, for example, our chief cash crop, is not priced in Nigeria. It's probably priced on a foreign exchange.
Maybe Switzerland,
exactly,
or London, or Chicago.
Exactly. And you see all these foreigners coming into play here. Yes, it's good. We want foreign investors to come into the country, but can we create a transparent way for us to be able to determine the prices of all these commodities locally?
And our local farmers will be benefited. We're having that type of ELPS, commodities exchange, here in Nigeria.
And that is the drive. That's why we're positioning ourselves to be able to increase value to the primary producers of these commodities, whereas you're also creating an avenue for local players and international investors to benefit from this. A lot of people have the notion that farming is the poor man's job, but the potential inherent in this sector is so huge. Once you have the right structure in place, you create transparency in the sector, and you bring in the right players to structure it appropriately.
This is something for professionals. So if I'm looking at Nigerian Stock Exchange website, I'm looking at or the trading platform, I'm looking at the NESD, I'm looking at the FMDQ. If a commodity exchange is going to join this, and I'm going to be looking at some aspect of what you call technical market. So I wanted to explain in a few minutes how does the price index, how do I measure and report this data when it's going to come? Because the maize, the sorghum, the cocoa will be in the warehouses elsewhere. But what I'm going to see are going to be statistics, basically.
Yes, exactly. And for us, when we introduced the index at the beginning of the year, it's just for us to create an avenue to beam light into the sector and then be able to track movements of all these commodities prices across the year, and then being able to reliably do a back test. Now, in terms of pricing dynamics, we have a couple of reports out there currently. The way we approach our pricing dynamics is basically by capturing data on logistics, which plays a huge factor in determining the final price of this commodity.
Logistics in terms of how to move maize, sorghum, soybean.
How you move it from the producing communities to where it's finally
maybe consumed. From Kebbi, for example.
Exactly. Down to Lagos.
Which is right down to Lagos.
Exactly.
Okay.
Exactly. So when you have that, over time you can be able to clearly define and say, okay, the price of logistics from Kebbi to Lagos is X. When you know this reliably and you've monitored it for a while, then you now track prices of the raw commodities where they're produced. So let's say paddy rice is being sold at, let's say, 1,000 naira for now, and then you add the X for logistics to it, then you can reliably come up with a price for the commodities where it's being consumed. All our pricing information that we're putting out there is based on the consumer's market. So you need to be really, really clear that there's a logistic factor here. And the question will be, why do we use the consumer's market?
That's a big question.
Exactly.
And I'm going to ask you to hold on. You're going to answer that question when we come back after the break. Let's discuss this market. I think Kaki today are trying to break down the ELPS Commodity Exchange. It's a new securities platform that has been unveiled earlier in the year. This is 6 months into the new year. You need to keep an eye on this as well. We'll be back into everyone. Bringing agro-commodities into the securities market. Adeyinka Akin today, a business development manager at ELPS Commodities Exchange. Thank you very much. Let's continue this conversation around how the report features of these 6 commodities, which you started tracking early in the year. These are for domestic products, not foreign. So we're discussing Nigeria here and what you see. Yinka, let's continue. From where you stopped earlier, you explained the features of this price data, exactly. How we arrive at this price data from the market to the farm, what the farmers would want, what the market is saying, and how do I profit?
Exactly. So, I mean, like I said earlier, the key thing is transparency, and then giving investors the ability to independently come up with their own fair value of these commodities. So we discovered that that's one key piece missing in the market. So what we did, we started in 2017, is to partner with one of the leading consulting firms in Nigeria, Kainos Edge, to come up with a price report that we can expose to the public. And the methodology is quite simple. Yes, we have exchange-traded prices, which is prices that buyers and sellers put on our own platform. But there's also another huge market there, which is the local markets. Now,
which is the one in Mile 12?
The one in Mile 12,
Mile 2,
or in the villages in Kebbi, Kaduna, wherever. Wherever.
Okay.
So for us,
the informal
markets where a lot of bargaining happens, right, to come up with the prices. So for us, we started in key regions where we capture these key commodities, right? Maize, sorghum, soybean, paddy rice, ginger, and cocoa. And our approach is simple. Can we get few people in all those locations that ensure that every market day they're in the markets, and then they ensure that they engage market participants to get what the price of these commodities are in those markets. Now, when you get that, and you should be able to put up a report together, and then use that as a proxy to compare what is currently being traded on the exchange. Ideally, the exchange price would have been the primary data to use, but because the formal market is not yet as deep and liquid as the informal market, we need to be able to create this comparison to give both buyers and sellers a view to what the market is. Now, one of our key propositions is, if you're a consumer of these raw materials, you don't need to bother yourself about how to source these commodities.
For example, Nigerian breweries, Guinness, Nestle, Honeywell, Dangote flour.
Exactly.
Okay.
You shouldn't bother yourself about how to source these commodities. What you should bother yourself about is, am I putting in the right prices for these commodities? Right? So this report is key for them. Now you put exchange traded prices there, and you put the markets, informal market prices there, and then they can gauge based on their own purchasing data and projections on what they think the fair value of this commodity is. Of course, the end value is for all these trades to come in through the exchange, but you have to start building it from a base until you have that transparency to a credible level that market players can flock into play.
Okay, so let's look at January, February, and March, the first quarter of this year, and see what data we have there for this for those products. I just put that on the screen now. Try to unpack that for us.
So one of those prices, the first one we have is the price data, and then on the top of this data that we capture, we do some level of analytics on it, right? Put some analysis to the numbers. And one of the things we cover is we compare what the volatility is on the exchange traded prices versus what's the volatility we experience in the informal markets.
At the open market.
At the open market.
So for 3 products here, for maize, for soybean, and for paddy rice.
Yes. And over the months, you can see this variability in all these prices. Now, one of the key fundamentals of agricultural investments in Nigeria today is that the production is highly seasonal, right? So everybody knows when you're going to farm, everybody knows when the harvests are coming out. And most buyers right now always front load their purchases at the time of harvest. So at that point, which is usually Q4 of the year, you see a lot of volatility in all these prices, which always tapers down by the Q1 of the following year. Now, it's a theory for us. So we do a level of test, A/B test, to see, okay, how should we approach the pricing of this? Exchange traded prices versus open market prices. But for us, it's not just either. It's more of, can we put the two together and come out with sound proxies for investors and eventually find out takers of these commodities to make their decisions. So for maize, for example, by the time you look at January, February, March, you see higher volatilities in January, and it decreases
about 16%.
Exactly. Exactly, and it's that volatile across all regions. So by the time you use your methodology to come with an average, this is what you get.
And that's due to season.
It's due to season. Yes, the seasonality of the
product. Because I'm looking at 9% variation by March.
Yes, yes. So a lot of purchases will go on January, March, by February. Then by March it will be going down because most of these consumers already have their stock for the year in storage. Now, for the consumers of these raw materials, is that a sound value proposition? They're literally tying down working capital. And this is a place where capital market players could come in to help provide an alternative asset class to finance this inventory for these off-takers, right? I mean, yes, the cost of finance could be lower than what we have right now, but there's still much more you can do with your working capital than tying it down in raw material. So the first thing is, do you have a credible storage where you're guaranteed that the volumes are, which is why every commodity that we are reporting the prices on our platform as exchange traded prices are already passing through our storage, or they are in our storage centers.
Bit of a warehousing?
Warehouses facilities across the country, basically. Now, when you have that in place, then investors are rest assured that whatever they are financing is collateralized. So the risk of default or the risk of losing the money for value for
money the warehouse.
Exactly. Exactly.
So you look at wealth creation here across board. That's what I'm interested in. I want to see the value proposition for everyone within the value chain. So quickly, for a minute or less, how does it benefit the farmers, those who own the farmers themselves?
The farmers get access to direct prices of the commodities that the final buyers want to buy. Remember, in this case, we are eliminating the roles of non-value adding middlemen. So those that would have rather taken advantage of the smallholder farmer and discounted the price values they would have purchased from them.
Peanuts,
pay them peanuts.
They take it, put it on
exactly,
on vehicles.
And then send to the final off-takers to get their own premium on it. We are trying to eliminate this because it's not value adding. The farmer produces these, so why can't they have access to the prices?
To good market price.
To the good market price.
So instead of buying a bag of rice for about 1,000 or 2,000 from them, it goes to the open market, it's 12,000 plus.
Exactly. Exactly. So you make this price available to the farmer as well, because when the buyer wants to buy, the price is available for everybody, and that's the role of our next thing. They can see it. They can see it through the network of our warehouses. The next step for us as a market is anywhere we have the network infrastructure, we can empower the smallholder farmers to have access to these prices on a real-time basis.
So they're mobile phones?
Yeah.
I
mean, there are a lot of technologies out there that you can leverage on.
That can deliver it.
That can deliver it.
Adeyinka, thank you so much. This is not a one-off conversation.
Definitely.
We've got to have you back on perhaps on this show, any of our shows here on channels, to bring us up to speed on how this is working out across the value chain. Thank you so much.
Thank you,
and everyone, we thank you for watching. That's your Capital Market for this week. I'll see you again next time. Have a great day, everyone.